of our videos in the past, you know that the first thing we have to do is go through this disclosure/disclaimer. Very important. If it is the first time you're seeing it, please take a screenshot of it, read it in detail in your leisure. But a couple of things the powers that be want us to highlight is, number one, we are not registered to give individual investment advice in the United States. And two, because we have a lot of international viewers, a lot of international subscribers, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. So other than that, again, read it in detail in your leisure, and just don't want to make too light of it, and it is important stuff. All right, so the process for tonight, we'll go through a bit of a market update, talk about what's going on, especially since the last market update that I did last Thursday. Interesting things have happened, so we'll go through those. We'll review any closed trade alerts. We have one to look at tonight for our Elliott Wave options alert subscribers. And for those of you that are not alert subscribers, it gives you an idea of how that process works and what to expect when you decide to become one. Then we'll take a look at our past case study considerations from the last few weeks within TradeFinder. If you've been watching, you know that the record of TradeFinder case study considerations is pretty darn good. And then we'll look for a current case study consideration to add to the list for tonight. And with whatever time's left over, trying to be respectful of your time as well as everybody's, we will do some general Q&A, which for the most part normally amounts to you asking us about your favorite stock symbols and we looking at our charts. Again, can't give you individual investment advice, so we put those up on our screen and show you what our indicators say about your favorite stocks. So that's it. That's how TradeFinder works. So with that, let's go ahead and move into the look at the market. And boy, things really changed when this last zigzag became qualified. This is what we highlighted, and that kind of we had the markets hanging on, hanging on the edge of a cliff meme with one of our videos a couple weeks ago. And it really was at that point in time, but it managed to pull itself up. And this zigzag, this last qualified zigzag, was the key, in my opinion. Now, the interesting thing is I was curious as to what was going to happen here after the 9th when we hit that 100% extension. So you can see this zigzag here, and obviously you've seen the big one. I don't think I have to show you that again. So we have a complex C wave, zigzags within zigzags. You got to love that. We just finished our zigzag mastery class. If you haven't, if you didn't sign up for that, the educational information on our website at EWOtrader.com. Just was a fantastic class. I'm biased because I like zigzags so much, but they're everywhere. And hopefully you start to see those when you're looking at charts. That's the whole idea, is to give you the perception of them so that when you're looking at a chart, you don't just see a bunch of lines. You start to see patterns come to fruition. I used to talk about this when I was doing live, back in the day when we actually could do live seminars. And I would talk about how you go in and you'd buy, like in a Spencer's Gifts or something where they have all the crazy things. You could buy one of those posters. Remember, and it just looked like a bunch of hieroglyphics. And then there was some trick that it would play with your eyes. But at first blush, all you saw was a mess. But then when you stared at the poster long enough, an image would appear throughout the hieroglyphics. So it was some trick that it was playing with your eyes. Well, I always talked about understanding technical chart patterns is a similar principle. When you don't understand the patterns, you just look at the chart and you see a bunch of lines, and that's all you see. But then when you start to understand the patterns and what to look for, the patterns will actually jump off the screen at you, and you'll be like, that looks like a zigzag, or there's a triangle, or I bet we're forming a flat. All those types of things you start to notice, and it really does affect your trading and make you a much better trader. So I was interested to see how we would handle that, because that was the 100% extension. And look, we were extended. We put the 10-day moving average on there. We had gapped up here on the 5th. And then we continued to run to the upside, and we're right there at 100% extension. Hasn't even slowed down. We're still a tiny bit overbought with where we are with the 10-day moving average. You can see here, so a little bit of a consolidation would not be out of the question. In fact, could argue that it would be healthy. Now, I made a comment in the last S&P update that I did that, and we don't get what we hope for, right? I mean, we can sit there and talk to the market all we want about, oh man, it'd be great if you did this, but honestly, if the market ran up and hit that 420 level from the big zigzag pattern, or went all the way up to 426, which is the 161, and it doesn't have to get there, right? Because that's an extended C wave. It's already completed the second leg of the third leg, excuse me, of the zigzag pattern, the C wave, the second impulse leg, I was trying to say. A and B, or excuse me, A and C are impulses. So if we don't get to 161.8, that's okay. But just to run straight to 420 or even 426 without a pullback, I think sets up a great short opportunity because we are overextended. The VIX is down. VIX is down in 1665 now. So we're under 17. So the VIX is getting down to where it's been for a while, which is why we were able to add in a out of the money butterfly on Google for our subscribers, which was great to be able to put one of those back on again. But if we run straight up there, we haven't filled this gap, and you can see gaps, they happen, but they're not that common in the SPY because it's an ETF and there's so many stocks to take advantage of. And so quite often you'll get a little bit of a gap that gets filled immediately, but to get a big gap that takes off, a runaway gap, if you will, kind of interesting on something as large as the SPY. But if we could run right all the way up there, first of all, our long positions would be in fantastic shape, but it would set up a wonderful short opportunity. We still have a couple short positions just in case, because the market is overextended and it's prudent to protect things. I mean, we could come back down and fill this gap and test that 61.8% level at any time now, because we've passed the 100% extension. So now that we've moved past that, we could reverse tomorrow and come down and hit this level before going up to the extended level. That would be more normal, and that would make hitting the 161.8% level a little trickier as far as where's the next move. But I think if we run straight there now, man, that sets up a great short opportunity, because we'd just be really overextended. So I can sit here and say that would be wonderful if it happens. The market rarely does what would be wonderful. It rarely gives you just a perfect setup. Just not that easy, right? Trading is not that easy. Anyone that's been trading knows that. We'll wait and see how this plays out over the next couple of trading days. But there's some pretty interesting moves that are being made. Now, let me show you this, because this was with those things that I talked about in the last SPY update, with some things that were showing warning signs. The biggest thing that those that wanted the market to go higher could hang their hats on is look at that DMI. I mean, it just doesn't really look much better than that. You'd be hard pressed to find a setup anywhere on any stock with the DMI that look better. Look at the amazing separation between the positive and negative directional indicator. The ADX is moving up fairly vertically, more than the 45-degree angle that I would prefer. It's broken above 20, which is personally my level. That's telling you there's strength to this move. So even though we had some tiny bars here, low intraday volatility, which is usually caution, the DMI is telling you this is legit. There's strength behind this move, and we could go up to the 161.8% level, or at this point, we're at what, 412.86. We are not very far away from that 420 level that we've been talking about for, I mean, how many months now have we been showing that zigzag pattern? So at least 6. We've been talking about that one particular zigzag pattern, and so we're getting pretty close to fruition. So those are the things that I wanted to share with you. We've broken through 100%, so that was another level of, okay, is this where we correct? Nah, kept going straight. And then the DMI is telling you, yeah, there's strength behind this move, and we could go higher from here. I just want to remind everybody, it is important to note that this zigzag has done what it's supposed to do. So a correction here doesn't disqualify that big zigzag pattern. You can see there's been corrective moves along the way. We're getting to the point where we're pretty overextended. Looking at the CCI, that's encouraging if you're long because it's coming down. And so that leaves some room for it to turn back around and head back to the upside. It's really interesting to see the CCI get that high, which is elevated for the SPY, and then the market continue up and the CCI come down, because this thing could turn and head back up and really provide fuel for that move up to 420 or 426. That could easily happen. So anyway, that's the market. That's what I wanted to share with you. We'll be doing another SPY update sometime later this week and see what occurs over the next couple of trading days. But that was really important. All right, so wanted to share with you, pardon me, a closed alert that we sent out for our subscribers. This was on Yum Brands, and this was in, as you can see, our high value portfolio. You've heard me talk about that a couple times. That was something that our subscribers requested. Our MO, modus operandi, if you will, with Elliott Wave Options is to send out alerts based on $500 of risk per alert that's sent out. That's where we try to keep things, and it's fixed. We don't do naked options. We don't do credit spreads where you're taking on more risk than you can make. We don't do those things. We put out fixed risk trades, understanding time decay can be an issue there, or is an issue there. But when weighing those things out, we prefer the fixed risk over, the opportunity to blow out 4 great trades and 1 bad one with things that don't make sense, like credit spreads from a standpoint of risk versus reward. So with this, we set up a volatility strategy strangle, which is the majority of the positions in the volatility strategy, even in the high value, which will allow more risk. So the reason the high value is there is that's for people that have larger accounts, and the subscribers were saying, hey, what if we had larger accounts and we wanted to put on positions that carried more than $500 of risk, because it does limit the type of positions that you can put on when you limit it to $500 of risk. If you stay with any sort of math with the Delta, et cetera, you're getting with the Amazons and things that you just can't find a viable trade with that kind of risk management for those positions. So that's what the high value means, is it just allows more risk than $500 per alert. And so that's for higher dollar accounts. Now, we entered this on February 24th, and you can see it was a really nice Elliott Wave symmetrical triangle. It's one of my favorite patterns. Big vertical move to the upside, followed by a symmetrical triangle. Love that pattern. Doesn't get much better than that, in my opinion. So it's set up really well. Now, just because it's my favorite pattern doesn't guarantee success, does it? No, there's no guarantee that the stock's going to break out. But that's the only thing we need in a triangle. We just need a breakout. Well, it took a while. So when you take a look at this, you can see that our exit alert was just sent out yesterday on April 12th. And here was the breakout. Now it looks like, wow, that was a great breakout. And it was. The call option was well into the money. And the reason that with the call well in the money, we still only made single digits on the percentage return was because it did take so long for it to break out. So you can just see it went sideways for another month plus before the breakout occurred. And then it decided, and there are 3 different ways stocks break out. This is one of the things I wanted to share with you on this. One of them is they break out, they come back and test the breakout exactly the way Yum did, and then it continues to move to the upside, creating a nice zigzag there on the breakout. Sometimes they just break out vertically, and then they come back. Other times they'll break out on a 45-degree angle and run, and those take a while to retrace. But the vertical breakouts can sometimes turn around and come right back down. So you can have a big breakout and a retracement all the way to the breakout point of the triangle, all occurring within a short period of time, which brings in what we call the lottery ticket trade, where maybe you leave one of the options on to see if you get the move back to the downside. So here we were overbought short term with the 10-day moving average. There's too much separation there for my liking. The ADX is not within inside the positive directional indicator anymore. We're approaching 40. Looked like this breakout move was running out of steam. And so we close it out for a 9% gain. Now, looking at our mark-to-market graph, which is we are as transparent as you can get at Elliott Wave Options. We post everything. You can see where every position is every single day. I don't know who else does that out there, but there you can see. And note that for the most time in the position, we're below the zero line. So the position was at a loss, and that's what happens when you buy a call and buy a put like we do in a strangle. Time decay is going to work against you. And the longer the time goes, the more the time decay starts to get you. So we came back up towards the zero line here on that first initial breakout. Well, then we came back down to test the breakout. Well, now you're getting some time in there, and that's where you can see we were down 29% on this trade, and then the explosion to the upside. This is a pretty normal graph about how one of our strangles works. Quite often is going to be at a loss really quickly, if not the next day, until the stock actually makes its breakout move, and then you make your gain. Well, if this one had broken out and not retraced the gain and moved sooner, we would have had 3 times this. A 30% would have easily occurred, but it didn't. It came back down to test the breakout move, and because of that extra time, it cut into some of the gain that we would make. But still, the pattern that I really like, it did come to fruition. We did get a breakout pattern. Wish it would have broken out sooner without the test, but that's how it goes sometimes. But still, when you're dealing with these larger dollar trades, worked out really well in the end. All right, so let's go back now and take a look at any of our look at our case study considerations from the previous week. Now, we scratched a couple off last week. So we're going to go back now to Royal Gold, which we looked at back on March 9th. So 3-9, here we were. And man, we've been talking about waiting for gold to break out. And it's trying, but it's not there yet. I'm actually going to show you a chart of gold here real quick after this. So here's where we were on the 9th. And you can see it looks like we're finally starting to move here. We're starting to break out a little bit. So that one's getting interesting to see if there's follow through, but I don't think it can do it without, here's GLD, breaking above 165. This is what we're waiting on for our subscribers, our alert subscribers, to put a long position further out in time on GLD, break above 165. We needed to do that. So far, it hasn't. It's interesting that Royal Gold, but remember that's a miner, that's not actually the metal, is breaking out with gold prices down. So, I mean, does that make a lot of sense? You would think that a miner would need prices to move to the upside for it to help them. But is that an early indication that gold is about to break out? We'll see. But I just wanted to share those two things with you, and the fact that our GLD looks like it's ready to move. Now, on the 16th, we had already closed out PSA, which was public storage. And then AOS was also identified that day on the 16th. So there's where we are now. Check that out. Something that you might want to consider doing here. Now, I've talked about this a lot, where Elliott says, look at the small triangles. Look at the small triangles. Well, it's smallish. It's not that small. But when you have a triangle in the wave 3 or 4 or whatever, Elliott says, hey, it's likely to break in that direction of the bigger impulse pattern. And I've always said, from a trader's approach, if you've watched any of our educational stuff, when you see a triangle, you got to protect both sides. Even though Elliott is comfortable in an impulse wave with the triangle, it's likely to move in the direction of that impulse. I still feel, from a conservative standpoint and a trader's approach, it's best, especially with the way we do strangles, putting the math in our favor, to protect either direction. It's going to break out, but which way? Well, even Elliott on this would say, hey, there you have a triangle following a wave 5, then maybe in this one, you better protect both sides. So my point here is that we were looking at this to continue long, but an adjustment here might be, and I'm going to make a note of that, to add some sort of an out of the money, about a 25 delta put or whatever. So I'm going to write morph or adjust to strangle, because that's the smart thing to do. Now, if it breaks to the upside, we're not going to make quite as much as we would have, because we're going to add the put. But if it breaks to the downside, then we could be in really good shape, because it's made a nice run here through right there. And so that's, you know, that's that pattern that I really like. It's very, very similar to the Yum trade setup. Big move to the upside followed by a symmetrical triangle. It's going to move. See, the key is I can't tell you when. That's the only key to these, is that they're going to move. They're just like filling a gap. You don't know exactly when the breakout's going to occur, but that triangle looks like it's pretty much done. But so did Yum, and it went sideways for another month before it broke out. So there's, again, no guarantees, but that looks good. So I just wanted to make a note of that, as I think prudent thing to do there is to go ahead and adjust that to a strangle, not just a long position. All right, so then next was Draftkings, and that was on the 23rd. So that was the following week, which was also a strangle. And watch this. I don't know if you've been following this one, but boom, there you go to the downside. So making a pretty significant move, bounce back up, move lower. Talked about that last week, and we've continued to the downside. Made a note last week that if you hadn't taken it off, just see how far this bounce went. And you can see by looking at the moving averages that it came back, traded around that 10-day, and now we've fallen again. Big move down yesterday, a little bit of blip here. We also talked about, from a fundamental standpoint, you know, we're done with the Super Bowl. We finished with most of the big major betting events. March Madness is over, the things that people really put a lot of money on. And, you know, maybe this is a time for these kind of stocks, the gambling stocks, to take a bit of a lull. And so that's what looks like it's happening. So if you didn't close this out back there on the 29th at the end of March, then you've got another opportunity here. We were a little bit oversold after yesterday's move, a little move back to the upside today, but at some point in time, you have to look to say, okay, I'm just going to take that one and go. And then next was Google, also on the same day. And here's where the chart was on Google. And we had this triangle here. And I made a note and mentioned this to you. We didn't do a strangle on Google. On this one, we did a out of the money call butterfly. And this is kind of going with Elliott's. This is likely to break to the upside. And we waited for it to break to the upside. So it wasn't that, oh, we just guessed. Let it break. And then we put the out of the money call butterfly on. But you can see it's made a nice move. A little bit of a consolidation here following that big breakout move. Still above the 10-day moving average. So a little bit of a doji today. We'll see what that means tomorrow. But big vertical move, a little bit of consolidation. Looks really good. And you can see that's a pretty darn good looking DMI as well. So it looks like Alphabet or Google may continue to the upside as well. So those two strangles that we looked at on the 23rd both did very well. Now the next ones we looked at on the 30th were from our momentum search from the lower dollar stocks, which is kind of the, you know, taking some of the hysteria from the whole Reddit Robinhood stuff, but putting some true technicals behind it, not just short interest and trying to screw the suits type of thing. And we've had some pretty good success. We've had one or two that haven't worked too well, and we've had some that work great. And these two, watch these, worked really well. So on the 30th, BAK, that's where we were, just flat, straight vertical since then. So again, at what point in time do you want to take profits? For me, I'm crossing that one out and saying, take profit. You're just getting really greedy if you don't take the profits from that kind of a move out of a lower dollar stock. Well, then we also had CBD, which had already gone pretty vertical. So that was a little bit nerve wracking, but then watch, boom, look at today. I mean, it ran all the way up to its target. So we go back, the target there was right around 7. And we're there. Close today at 682, hit 693 on the high. And a gap up. So looking at the DMI, man, it still looks like it wants to go, but I'm going to say take profits here too. And if you haven't, then just, when it hits your price target and you get a vertical move like that, there's just hardly much else to ask for. So 6.5% move just today. So both those broke big. So we're closing both of those. And so we have DKNG from the 23rd, which is marginal on closing that one out. Google may have a little bit more move, but made a nice breakout. So the ones from the 30th are gone now. And then last week we looked at SWK. So Stanley Black & Decker, here's where we were last week. And then not much has happened since then. We're pretty much right where we were. Little bit of a triangle. So small triangle here. Again, Elliott says, don't just look at the big ones. Look at the small ones too. You never know. So, looking at that DMI, it's gone sideways on the ADX, but two directional indicators don't look bad. So this one would be one where Elliott would say the likelihood is it breaks to the upside. So from here, I would go along with that and say, hey, if Elliott says so, let's see, because it's a small triangle. This one's almost too small to actually do anything, even with our strangles, just not wide enough to warrant the risk. Or you could just wait. But since we looked at this one last week, we're probably in it already. If you're following it, then you wait to see what happens with potential breakout from there. Then Century Casinos. Now this one showed up on the search 2 days in a row, and I was pretty encouraged by that. And then hadn't done anything. In fact, it's a little bit lower than where we entered. So far, this has been a rare one that hasn't worked out thus far. And could be, I think we've only had one. I think there's only been one in all of the months that we've been doing TradeFinder. We've only had one trade that we would have closed at a loss. And so this could be the second one. We'll wait and see. But it's a pretty darn good record. But we'll see how it's not done yet, but certainly hasn't been too nice of the last couple of days. You look at the CCI, and it's back down near support. And we look at that because that's a very near term. That's our shortest term indicator that we look at. The DMI has the two directional indicators, which are fairly responsive, but the ADX is slower and more lagging. But the CCI is super responsive every day. And so looking at it back down here around 0, could be finding support there. We'll see. And we'll take a look at that one next week. But if we close below this low here, then you get out of that one. And then TWI was one that we looked at also last week, and pretty much exactly where we were there. It's still climbing up, building a bit of a triangle here. I still call that a symmetrical triangle, but you could call it a quasi-ascending triangle. If you look at the DMI, still moving up on the positive directional indicator and down on the negative. And the ADX is trying to turn up. So it looks like maybe this one wants to break to the upside out of this pattern here as well. So really no concern on SWK or TWI. It's CNTY. That's the problem child from the last number of months. Now we did put some on the watch list. So I thought, hey, I always talk about putting stocks on the watch list and then coming back and looking at them on a daily basis, but I've rarely gone back to talk about our watch list stocks here at TradeFinder, so I thought I would do that. So here are the ones that we looked at last week. So we had 5 below, and we were looking at the DMI, and that looked really good, didn't it? But I said, you got to wait. We have to wait. I made the note. We have to wait for that ADX to break above 20. You look at that, you see the separation between the two directional indicators. You see the ADX turning up, and you're like, it's going to break. It's only a matter of time. You got to wait. And look at what's happened since then. The ADX never made it to 20. It's turned back down. Now the positive directional indicator is coming down. The negative is coming up. The stock's going sideways. The ADX never gave the signal to go long. So that's why it goes on the watch list, and that's why you wait for your indicators to trigger. Still no guarantee. We know that. It's still no system is perfect, foolproof, 100%, nothing like that. But when you have a system that you have confidence is going to be right a high percentage of the time, then you have to follow the indicators and let them trigger. This one didn't, so we're not going to pay attention. It's going to cross that one off the list because something would have to drastically change. We can come back and look at it if it does. Then Mastercard, that one was also one where we were waiting for the ADX, but we were keeping it on the list because it looked pretty good. A little bit of a launch pad effect there that I talk about a lot. So the launch pad, we're breaking to the upside, and it's looking better, but it's still not there. So Mastercard is looking interesting, but here's 20, and the ADX hasn't broken there yet. So we haven't gotten the ADX above that 20 level, even though it looks awfully good. It's not there yet. So we'll keep that one on the watch list and keep watching it and see if we can get that ADX to break above 20 and keep the two directional indicators looking good. If we look at the moving averages, it's kind of hugging along that 10-day moving average. So that one looks good as far as to continue to watch. Then we look at TAN, and boy, just that ADX doesn't want to come down. It's already starting to turn to go back to the upside. So that's interesting, but what a good looking triangle we're building here. Now, if you've watched any of the stuff on triangles or strangles, etc., you know that one of our entry points is having the ADX break below 15, specifically 13 is what I prefer. And that doesn't mean that there aren't other triangles that break out, etc. But what it means is that when the ADX is higher, likely some more juice in the premium. The premium's a little more expensive. The options are more expensive for putting on a strangle. We really want to put strangles on when the options are as cheap as possible because we know that when the stock breaks, one option will make money, one will lose. So you want them to be cheap. You don't want volatility coming out even out of the option that's breaking in the direction of that move, whether it's to the upside or the downside. You want that one adding volatility, not reducing it, which could happen if both of the options are expensive before it breaks. And that's kind of the issue right here. I looked at the options, very liquid, plenty of room, but man, it's just a little expensive. And it doesn't look like it's going to get any cheaper with the ADX starting to turn up. I talk about I have several analogies. You've probably heard them all by now. But the one that's for this scenario is kind of like the lava gurgling or boiling underneath a volcano. You look at the volcano itself and you see nothing, right? Just sitting there. But we don't see what's going on underneath before it gets ready to blow. And that's kind of what happens when you have one of these triangles and the ADX is turning up. So this pattern itself is continuing to consolidate, but the ADX is already moving up. Now, if that ADX is down there around 15 and starting to turn up, that's a gold mine. You love that, but not when it's above 25 and turning up, because you're going to have to pay a little bit more for the options. So I'm calling a flip of the coin on this one. It would likely, even for an $85 stock, tip into the high value side in order to get the strikes that I really want. So in other words, the cost would violate the $500. But man, that pattern looks good. And it doesn't hurt the fact that the bottom here, the horizontal line, is really close to major support there at 80. So if it were to break to the downside and we could get through this little bit of churn here, right in this area, we could come way down there to 50 in a heartbeat. Now, it may very well break back to the upside because something propelled it up to 120 back in December, right? So they could blast off here and use all this as a base, all this stuff as a base, and go boom, vertically back to the upside. So it really does look good to break out. But that's the caution when you have the high ADX, is the expense of the options. So just wanted to share that with you. All right, so now let's see if we can find a case study consideration for tonight, and then we'll move to some questions. So looking for our pre-computed scan, since we've had such luck and the market's moving to the upside, let's see if there's anything in the momentum scan. And there are 4. And TV. Wow, CBD is still on the list. Holy cow, I just said take profits in that one. Yikes. Well, you might come back at me next week and say, look what happened. We should have stayed. Maybe that happens, but you know, if it hits your price target, you make a nice gain. At what point do you say you're being greedy? But doggone, it's not on the search again. So I'm still staying with take the profits, but it's interesting to see it back on the search. TV, it's another international ADR. I don't know what options even look like here. Not as bad as I thought. They're actually really liquid. You can go out to July. Problem is that the ADX is breaking outside. See, we've had an upward move 2 days in a row. 2 days in a row, we've closed higher, and the positive directional indicator has gone down. I don't like that. Maybe this continues to break higher and it turns around, but that's not what should happen for a stock that's getting ready to blast higher. So I'm gonna say no on that one. ULBI, Ultralife. Same thing here. The positive directional indicator, I'll see the same exact thing. I mean, same exact thing. 2 up days and down on the positive directional indicator. That's not the direction we want to see this going. So last but not least, we'll try ARI. Oh, wow. Now, this is different. I usually don't like to trade REITs. I don't like the pricing and the options and the way they move. Very difficult, I've found over the years, to make money in. I mean, some of them do really well. Let's see if it's super liquid, because that looks pretty good. I mean, you had this big, huge run with a super high ADX. I would have loved to have seen it come down below 20, which it didn't do, but it got awfully close. And now it's turned back up, and we have separation between the 2 directional indicators. So that looks good, but yeah, it's wide spreads, low liquidity. So we'll let that one go too. All right, so we'll move off from that. And then let's go to my impulse search. There's 8 results there. When do you think there'd be more? I mean, I know I have it refined pretty well, but with the way the market's moved, I mean, when you look at that, we've been up, what, 1, 2, 3, well, don't call that, quite a bit over the past 2 weeks, almost every day. Kind of would have thought there would have been more than 8, maybe 10 or 12, but let's see, there's 253 stocks in wave 3. So if you are new, this software is ProfitSource and is produced by a company called Hub, HUBB. You can find information at ProfitSource.com. And they've been kind enough to include the searches that I've created for our Elliott Wave Option subscribers. These are the ones that I use to look to find our trading opportunities, to send out alerts, and they've incorporated them in here. So if you are an Elliott Wave Alert subscriber and you have this program, you have access to all my searches, and you can run combinations, variations with your own indicators. You can follow along. You can use it to learn, why was this stock selected as an alert, this one wasn't, stuff like that. You can ask questions, send them in to us, all those things. So just wanted to point that out. That's the Elliott Wave options are all searches for our subscribers. So you can click on my search and you can see that there's 8 results, but then we can also say, are any of those in a wave 3? And one of them is. SKM. And I think this is South Korea Telecom, I think is what this is. And yeah, this is the problem that problem I've had in the past is the spreads are wide. I've wanted to trade this one multiple times, but the spreads are wide and there's not a lot of liquidity. But if you go out to June, there's actually a decent delta with a decent spread. Problem being that we gapped up today, but that was on good volume. As you can see here, a lot of people say you don't look at volume very often. It's in the search. There's no substitute for price to volume action. It always complements any technical trading system. And so as much as we like Elliott Wave, much as we like the DMI, etc., we always have price to volume action included in the searches. It's always there, even if I don't talk about it a whole lot. So looking at that DMI, man, that looks good. Gosh, I hate that gap. But everything else looks really, really good. Let's go back to the CCI. Yeah, see, that shows room too. Maybe another breakaway gap like occurred in the market. All right, I'm going to write that one down. Let's see if we can find something else. It is thin, but there's over 200 contracts out in June, which could work. So it's not that wide of a spread. We've certainly put on stuff that was wider before. So that's that one. And let's go back and look at the rest of them, and then we'll take questions. So there's the SKM, SNPS, Ulta. Huh. Interesting. Dollar General back on the list. Really interesting. All right. So the way my searches work here, for those of you that may be new, you can see Elliott Wave's not on there. You're like, oh, you guys are Elliott Wave options. Well, the search results come from a set of confirming indicators. And we have all of the information on our website, or trading scans that talk about all the different indicators that you can find. There's a session on every individual indicator that we look at. So from there, from that list, then I apply Elliott Wave to see if there's a good looking Elliott Wave pattern. And in this case, found support here at the previous three. A little bit of a launch pad effect there. And the blast off from the launch pad. So, hey, that looks pretty good. And the ADX is just broken 20. So the target's pretty clear, right? We're looking at going back to 300 to the recent highs. So it broke up, came back down, tested it, consolidated. It's breaking again. Make sure we're not overbought. We're not. Let's see what this one looks like. Synopsis. Yeah, forget that. Spread's way too wide. That one actually has a little bit of liquidity, but the spreads are monstrous. That could be one. You've heard me talk about this before, where there's volatility expected. So when the market closes, they widen the spreads considerably and then wait. And then when the market opens the next day, then the spreads tighten up. It would take a lot of tightening because they're super wide. But sometimes that occurs. So that's a shame. There's SKM that we already looked at. JKY. There's that little triangle. The ADX is curling up. Positive directional indicator going up, negative going down. The ADX is between the two. Not in a 5-wave pattern. Coming from consolidation. I mean, that one looks decent to go long, but we might be able to find something a little bit better. So weird. This is why you always have to look at options pricing. I mean, the liquidity is not great, but yet the spreads aren't that wide. And then we just looked at one where the spreads were super wide and no liquidity. So I don't, it's crazy. Let's see if we can find something else, but I'll leave that one on the list. Ulta had a big breakdown, so now it's returning back to the upside. Big day today. Look at that. Let's take this stuff off. And ADX is curling back up, but it's not above 20. So that goes to the watch list. So Ulta. Keep an eye on that one. But can't do anything today. Arthur Gallagher, Adobe. That looks like a pretty good DMI there. Look at that. Oh man, just destroying that wave 5 target. Look at that. How good is this Elliott Wave stuff? Just right smack in the middle of that tap box. 66%, so right at the 61.8% fib corrective level. So there you got a big zigzag right here. And you can draw it from there, or there, either spot. So the question is, do we go to the next level? And the DMI is suggestive that we have an extended C wave, that we continue to 161.8. Let's see what those options look like real quick. And same thing, thinly traded, but the spreads aren't that wide. Man, it's frustrating when the options don't cooperate. Let's try Adobe. Look at that run. So this is more on the 45-degree angle that I like. In fact, let's look at this pattern here. Okay, so good looking DMI, agreed. Positive directional indicator going up, negative going down, ADX curling up. That looks really good. And a little bit of a small launch pad there. Actually a better one right there. And then the blast off. It's actually a touch more vertical than I thought at first blush. But we are about to, let's see if we're overbought. Yeah, a little bit. Maybe that one wants to rest a day or two, but we are pushing up against some big resistance that if it broke through there, who knows how far it could go. Yeah, as expected, there's tons of liquidity here. Touch expensive going out to June, but the spreads aren't wide. Probably because of the vertical nature of that move. Let's put that on the watch list too for maybe a pullback to the 10-day. Tough to go long with it separated like that. In other words, right here. But maybe before we get together again next week, that could pull back and we could take a look at something along those lines. And SAP. I think there's been option issues with this in the past too, because I've wanted to traded it before. No. It's liquid. Now, that's what happens. You get past the front month and the spreads do get a bit wide. But there's liquidity and decent deltas that you can trade. Well, you can see where I'm going here, I would think. Close that gap after a very, very long consolidation time frame and a good looking DMI. That looks really good. So that one's, there we go. So SAP goes on the list for this week. So SKM, SAP, and we got one other one to look at, Dollar General, and then I'll take some questions. Pretty vertical move there too. When DMI is just waking up. So there's the ADX, came down, got under 20, started up. So we're starting over from the downward move. You can see the real nice downward zigzag that we had there. See that? Boom. Look at that. Bingo. Look at that. 50% correction, 100% extension. Dead on the nose. Downward zigzag. Perfect. So now we've recovered that. We've retraced the entire C wave, which is what you would expect. The DMI is showing that there's some momentum here with the ADX curling up, positive directional indicator going up, the negative going down. All that looks good. Right at major resistance here. Just a tiny bit over bought, but not really a lot. But we've got resistance right there and there. So it's kind of in between a rock and a hard place. So let's put that one on a watch list too and say above 220, it becomes interesting. But there's way too much congestion there between 210 and 220 to do anything now, even though the DMI looks good and looks like it may break through that. But break above 220 and the shorts cover and that thing can take off. But let's wait and see if it gets there. So got a few on the watch list, got a couple for tonight. Take a look at some questions. NVAX from Alexander. Hey, Raphael from Sweden. Love hearing the other countries. Great to have you. So NVAX, ADX diamond down, a little bit of a breakout move today. I wish the ADX was a little lower. I wish it was below 20. That's a great looking descending triangle. See, the wave 4 corrected 75%, so that disqualifies the upward pattern. So take that off, but that's a great looking descending triangle. The only issue that I have is the ADX I wish was just a little bit lower. Yeah, you could go out to July and never mind. Spreads are way too wide. They're not too bad in May, but out to July, you can't really do a strangle there, but it's a great looking chart. It's going to break out. We did look at SWK, so we'll look at crowd. Jeremy C. RWD. Woo! Nice move today. Tested that wave 4. You can see that. So there was the wave 4 bottom. Tested it there. Now we're moving back to the upside. Would have liked to have seen the ADX break below 20. Didn't quite make it, but vertical movements out of the 2 directional indicators. Looks like that one wants to go higher now. I mean, that looks good. 10's crossing the 30. We're above all major moving averages. A little bit of consolidation on top of them. Been waiting for a really, really good looking entry on CrowdStrike for a while. So let's make a note of that. major watch list one there. That looks pretty good. Looks pretty good. Fubo, another of the Reddit favorites. Down here around 20. And I was looking at this, and you had the little doji back there on the 8th. Looked like, all right, something's happening here on the 9th. And then we came right back down. And we got another really nice doji today. At some point in time, if it can hold 20, it's going to give another run to the upside. But if it breaks 20, then it's all over. It's back to 10. Maybe a little bump at 15. But if it doesn't hold 20, then it's rough, which would make you think that there's some likelihood that it stays there. But that's an 80% correction in the wave 4. So there is no Elliott wave pattern there because the wave 4 has corrected too much. So it disqualifies the Elliott wave pattern. So you look at other things, just massive descending triangle. So trading, putting a strangle on that might be good with the fact that it's gone nowhere. Perhaps they've dropped all the vol that was once in this stock. Yeah. You can go all the way out to August for a decent premium now. So they've pulled the vol out of there. Man, I wish there was June or July, either one. Out to August is just way out. Man, that stinks. There is a lot of contracts out there, though. Super liquid. Let's see what happens if it breaks. But I mean, if you didn't want to do the strangle and you just wanted to go long, then your stop loss is easy. You're right there. If you break below and confirm below, so a breakdown day and a confirmation day to the downside below 20, then you're out. And I don't know that I would even really want to trade this one to the downside as far as adjusting it, because you got some consolidation at 15 and then down here at 10 at the beginning. So I don't know that would be, I mean, that's kind of like trading Apple to the downside. It just stair step all the way down. It's just not worth it. Apple's making a nice move higher now, but so that could get interesting there. Yeah, Podcast, yeah, I do see the potential. I think we are in a blow off top. I said that in the SPY, the last SPY video. See how far it goes. Does it go to 420? As it goes to 426? There's volatility coming back in the options now. I know it's slow, and it's certainly nothing like what they took out, but it's coming back in. And if we continue to see that, yeah, they're not going to let people go long in a long market with cheap options. They're not going to let them. So the volatility will come back in. So every day that we progress to the upside, now I'm not saying we have to go up every day. I don't mean that at all. But let's say every week this market moves higher, they'll start adding more vol back in, because like I said, they're just not going to let people make money to the upside that easy by letting them have cheap calls with the market running up. It's not going to happen. So the best thing that can happen is if we don't go up the next couple of days, we don't have a big, move down. We don't have that move down to the 61.8% fib level that I highlighted. We kind of consolidate a bit and then start to go higher. That vol come back in. Just for the fact of what I told you. They just won't let you do it. They won't. Carrie asked, several of the last 2 weeks, seems like the last 5 to 10 minutes of trading has been eventful. any idea that those are called buy or sell on the close orders. That's the institutions that are making the big bets. And so they just, you know, always talked about this. The big money trades in the last hour of the day. You can have good volume earlier in the day, but the big money players trade in the last hour. And so when you see stuff happen right around the close, those are buy on the close, sell on the close. They're big orders. And so the market makers have to process those in a relatively short period of time, which is why you can see some, you know, out-shaped moves occur right near the end of the day. So that's what's occurring there. Where would ETSY be by the end of the week? Boy, if I knew that. Let's take a look at it, see if we can say what direction it's going, but I can't tell you where it's going to be at the end of the week. Nobody can. Not a person on this planet can tell you where that's going to be at the end of the week. Some might get lucky and guess, but they don't know. Yeah, the ADX is moving down. I don't like that with the fact that we had some really good support here. So the bullish thing here is it really held 200, which it needed to do. So we've tested it, right? It was resistance in December, resistance in January, broke above it, support in January, broke above it, support in February, broke above it, held it in March, came back end of March and held early April. So it's held 200 often. Now, the problem is all those bounces have built a little bit of resistance in the way as well. And that's probably why the ADX hasn't turned back to the upside yet. But you did get a crossover here in the two directional indicators. So I would say that ETSY, I'll put that on a watch list as well, could be setting itself up to make a breakout move, but it's got to get above 240. So it needs to break above 240, and if it does, then it looks good. But as far as where is it going to be at the end of the week, I have no idea. Sandeep asked, and that's a good question. If we do go to 420 or more, what's the minimum correction target? Let me show you that. It's a good question. And also, Craig asked about Yum. How about a corrective move back lower? And when we look at it, I mean, it did sneak back up even after we closed it yesterday. So we're getting a bit overbought now. As far as the correction level, it's hard to imagine it going below 110. It was down here at 105, broke above it, came back down. It was resistance for a few days, and then we took off and broke up. It just 110 seems like, if it were to come back down there, that seems like a massive point of support. The ADX is now above 40. So, I mean, still stand by the exit, and maybe it just goes sideways or drifts back down. It could even hold 115 here. It does look like it needs to move back a little bit, but I don't think it makes a big move lower. I really don't. We would have held the put if I thought so. I don't really think it does. So let's look at the SPY and show you where we could correct back from here. So if we go to 420, well, let me put this other zigzag back on. So that first correction is 400. So 61.8. Even if we're at 426, I don't know that 100% would hold. I think we come back down there to 400 because it's a big round number. It's the top of the AM pulse from this last zigzag. So with all those things, a major fib level is, of course, 100% is too, but 61.8% is a big level. So I think that is the first corrective point back to 400. And I know that's not a big correction. But as far as if we run straight up and get a bigger correction, then you measure this entire move. And so let's take it all the way to 420. Let's just assume we stop there at 420. Then you're looking at this 38.2% fib level right here as a corrective point, which also coincides with resistance there and support here and support here. So those are your levels there. So 400 would be first and 374 would be next as far as corrective moves lower. Hi, Eddie. How you doing? Counting the waves on a symmetrical triangle. Could I get you to go to our website and look at the triangles? We go into great detail there on the triangles. There's some wonderful information. EWOtrader.com. Look up the Elliott Wave Core Concepts triangles, and you'll see really good information there on those. Jesse asks, is there a percentage that you close out a trade? Say if you get down 50%, do you cut your losses? No, that's in my opinion, it's a slow bleed system. The way I trade is I believe in making adjustments. And of course, remember, we're fixed risk. So that means time decay is an issue and time is going to be working against us. So quite often, the very next day after we put a trade on, it's showing a loss. Why? Because one day's gone by and you've lost that time decay. And now whether or not we're trading directionally in the impulse strategy or trading breakout triangles in the volatility strategy, time decay affects them both until the move is the expected move is made. So unless the pattern changes, then we stay with it. We trust the pattern. We let it come to us, even if we have to adjust to more time or just as the pattern maybe changes or morphs a little bit. But if the pattern completely breaks down and there's no discernible pattern, that's when we exit. So that's when we take our loss and go. So it's based on the pattern that shows itself, not necessarily on just a cold hard, all right, 50% loss, we're out. If you go back and look at our track record, you'd see, trade after trade after trade after trade that were winners that would have been losses if we would have just stopped at a 50% loss. I know a lot of people teach that because it's easily to market. Make 100% when you're right, close out at 50% when you're wrong. It's nice and neat. It's easy to teach, makes sense, sell stuff, but it isn't really super viable in the real world of trading, especially with what we've seen recently. We would have been out of every single trade with the vol that they pumped out recently. And now it's all coming back. The triple Qs, I was asked to look at that in the next SPY update. So I'll go ahead and look at that here as well. And you can see a very important level there on the triple Qs finally making new highs. It's taken a while, but finally closing at a new high today. And so we had this, here's one of those little triangles. And so Elliott was right on this one, right? We talk about this. So Elliott would have said that's going to break to the upside, or likely to. He didn't say it was, but likely to, and it did. So Elliott was right on that move. Now let's see, we're a bit overbought now on the Qs. We're at a major point of resistance. Can we blow higher right up till here because we're breaking to a new high? Maybe, but there's a little bit of separate. It's kind of in between. There's a little separation, but it's not extensive. Sometimes there's a lot of separation. There's just not enough energy to continue higher when you break to a new high. That's borderline. We might need to pull back down a little bit, or maybe it just takes off and gets extended from here because some shorts cover. I think the shorts will be watching or trade early in the day tomorrow, and they'll decide from there. But that's pretty interesting. For a zigzag on the Qs, well, we had a downward zigzag right here, right there. Right, another one, 50%, boom, dead on 100%. Here's the second one. Perfect downward zigzag that occurred there. What was the other star we looked at that had the exact same thing? So as far as the upside, you could make a case for this being a zigzag. Perhaps that's what you're looking at, because it's a 62% correction. Right at the 61.8% level, 100% extension. We've blown through that. And the 161.8% extensions at 350, which is the bottom of the tap box. So yeah, I think the Qs are going to 350. Now the question is, do they rest first? Do they rest first and then go to 350? But there's a real high likelihood that that's where they're going. That DMI looks great. So I say 350 is in the cards on the Qs, but does it need to rest first? Maybe. ARKF, those ARK funds took a big hit, and they're coming back a little bit too. Kathy Wood. See, they got vertical and it came back down, but now they're recovering. And we're at resistance there, right at 55. 37% correction in the wave forward. Tested it and held. Important that it made a higher low there. It's a good test. But we're at another point of resistance. So it's got to break above 55. Really important point. And the ADX isn't giving it any sort of kudos for that move there. Positive directional indicator is starting to move up, though. The negative going down. So it's looking at it. But the ADX is like, yeah, break above 55 and then talk to me. So that's the key there. Yeah, Charles, a really good question. Asking about a new subscriber that comes in on current alerts and whether or not to take advantage of those. And I always talk about, I will cover this in more detail in the insiders meeting Thursday night. I don't have a hard, fast rule on those per se. I do have guidelines. I say that they're a case-by-case basis, so there's no blanket, yes, get in all of them. No, don't want to do that. So I've got some guidelines on considering those. So yeah, we'll cover that in detail Thursday night, but really super good question. LLY on an island. Man, trading these drug stocks. You saw the Johnson & Johnson stuff that came out. Drug companies, crazy. Well, it had an island reversal right there. And it's had another one up here. Wow, that is crazy. Big island there and a gap back down. So if it gaps again, I don't know how you trade that. I mean, I don't even trust the Elliott Wave pattern on that because there's just too many big gaps. See, the way that mathematical algorithm works is it will estimate what's in there. So just based on past history, it will make an assumption of what would have occurred in there, but nothing occurred, right? Because it was a gap, but it has to try to figure out because it's a mathematical algorithm and that's the way they work. But it, it's just making its best AI guess, basically, is what's happening there. So that's brutally hard to trade that one. I would just say it's just a flat out guess. If I had to guess, well, this isn't a guess. 180 it needs to hold. If it holds 180, it can go higher and maybe close this gap. If it breaks 180, it's likely coming here and closing that gap. So, yeah, you're right, Charlie. Let's look at FSLY. We'll look at more of those on Thursday night because subscribers have been asking about those too. But this is one that I've been watching, and you can see the problem. The ADX is too high. I was hoping that maybe this would consolidate a bit longer, and it does look like it's trying to break out today. If it pulls back and lets that ADX come down a little lower, I'd be super interested in that one because it's a great looking pattern. So there's your Elliott Wave triangle right there. There you go. Drawing the triangle. I say let the tool do it for you. But there it is. So you just click on the points, highs and lows, and it draws a triangle for you. But yeah, I just the high ADX just bothers me on stock like this that's volatile. But yeah, it's I get that one. We'll talk more about that in the Q&A Thursday night. Kieran, we'll look at LRCX and then we're going to call it a night. Sorry if I didn't get to your question. Apologize. Doesn't even mean you guys ask all good questions. It's just a matter of time and went way over as it is, which I usually do, but I'm trying to get better at that. But looking at Lam Research, just a stellar company, and had that vertical move, went through a little, look at that tiny ascending triangle. You see that right there? And it's broken to the downside out of it, but it's been on a heck of a run. If that positive directional indicator can turn back, so the bad thing here is not only the positive directional indicator is coming down, the negative is going up. So it's giving an indication that this may need to rest for a while. A pullback to 620 would be super interesting. That's 600. The pullback to 600 would be really interesting in Lam Research. I don't know if we get that or not, because that DMI could remove back and the two directional indicators could spring back the opposite way. But a little bit overbought for my liking right now. Touch the 10-day moving average. That might be it. That might be all we get. And it turns, it goes back to the upside and to miss it. But maybe even just a couple consolidation days there and see if the positive directional indicator can turn back. So I would just be nervous about a test of 600 with where it is right now, mainly because that went straight up. And you know how I feel about that. Things that go straight up quite often come straight back down. Thanks for your attention, everybody. As always, we really appreciate it. Looked at some really good symbols tonight. Hope you found this informative. Hope you have a wonderful week. Look forward to talking to you again next week. Take care, everybody.